Today we've got Tristan Quiring with us to talk to us about the Calgary market.
So in the last year, we've had a price increase overall in Calgary of about 17.6% on the benchmark price. Obviously, detached homes have been leading that charge at 20%. And you have to remember as well, last year in March, we had already seen a 10% increase in that front half of the year. It gave us a kind of an idea of what to do next. So I'm working with a lot of investors right now when it comes to Airbnbs in Calgary, because it's the one way we can actually still attain the 1% rule. It seems that for long-term rentals, it's almost impossible with the prices you're paying for homes right now.
We've been ripping through on the channel different updates of the various major Canadian cities, and this is certainly one of the more optimistic ones and one of the more positive ones. So I'm definitely excited to see what happens with Calgary. Hey everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and today we've got Tristan Quiring with us to talk to us about the Calgary market. Tristan, Calgary is somewhere I know nothing about, absolutely nothing. So this presentation is just as good for me as it is for anybody watching this who might be tuning in for the first time. So why don't you tell us about what's going on here in Calgary?
Awesome. Sounds good. Yeah, thanks for having me on the channel again. It's been a while since last time I was on here, so things have definitely changed in the last year in Calgary. It's been definitely popping off. A lot of out-of-province investors, but the market has been spiking the last few months. It's been going a little bit nuts here. I have a presentation for you here on the market statistics, but before I hop into that, just want to kind of touch a little bit overall on what's going on in the city. This time last year, it was kind of similar to what's going on in Ontario as well. Since the year opened up, things were kind of spiking as far as benchmark prices, inventory was low, and the same thing was happening across Canada, especially in Calgary as well, when people were looking for more affordable options. So a lot of out-of-province immigration to Calgary and Alberta, and the same is happening this year as well.
Seems to be a similar trend all across Canada. So I'm looking forward to seeing the specific numbers from you and hearing more about this presentation, just because in that presentation we can just really dial in like what's actually happening in the market, because I know there's a lot going on with the current news cycles about interest rates and low supply and all this stuff, but I'd love to just see like what's actually happening in your market.
No, absolutely, and I'd be happy to share that. I'll just pull up the presentation here for us, and we can get started. Now, obviously, we're partway through April now. Depending on when this video hits YouTube, I'm not sure exactly when, but we'll have finished up April's statistics. We don't have a lot of statistics for April, but that's okay. We have March to look at and the first half of April here, and we can kind of see the trends that are going on. So in the last year, we've had a price increase overall in Calgary of about 17.6% on the benchmark price. Obviously, detached homes have been leading that charge at 20%. And you have to remember as well, last year in March, we had already seen a 10% increase in that front half of the year. So from about 16 months ago, we've seen benchmark prices increase about 25 to 30% across the board, which has been pretty much unseen in Calgary, even back in the booms of 06 and 2014. This has surpassed that and then some. So what we're experiencing now is kind of uncharted territory. And I'm sure it is for lots of the world too, with lots of the inflation going on. It's not just in real estate. Supply and demand is stressed everywhere. So that's kind of feeding into what's been happening here as well. Primary cause of the market going up is the lack of inventory. Now, in the last 16 months, inventory has dwindled to a point where it's a crazy seller's market. It's going to take a long time, if ever, to get back to a more balanced atmosphere. And part of that is, interest rates have been going up. There's been talk of that for many months, and that could be driving some of the traffic that we're having now. Like back in March here, we had a record sales month for Calgary in all of our history. So most transactions done to date in all of Calgary's history. Will it keep up like that? Probably not. Like we saw last year, things continued on a rise for about 6 months, and a lot of us thought it was going to drop off and come back down to normal again. That didn't happen. It stayed pretty stable going into December, and then again when the new year hit, things took a spike again for the first few months. So we've seen about a 4% increase month after month since the start of the year, and the same is happening into April as well. So if you look into the deep dive numbers here, I'll bring up some more detailed statistics after this page, but just want to kind of touch on a couple things here. Sales at 4107, that's a year-over-year increase of 41%, which is, again, kind of expected with having a record month for sales in Calgary. But new listings are only up 23.5%. So obviously that's going to create an environment that's a seller's market, limited inventory, and that's going to put a stress on prices upward as well. Inventory levels are down about 20% from this time last year, and they're down from last month as well. So we need more listings. That's obviously one of the biggest things that we're challenged with is finding more inventory on the market. And as people realize it's a good time to sell and the fear that things will drop, you are starting to see a few more sellers come forth and put their home on the market now to take advantage of the current benchmark prices in case they do reside as the year progresses, which I do believe things will stabilize throughout the year. But as you can see to here, month supply, basically if everyone stopped selling their home or stopped listing their home today, it would take us about a month to clear out inventory in all of Calgary. And that includes condos, row homes, semi-detached and detached. That's all across the board and all sectors. Apartment prices, as you can see, 6% up in the last year. That's obviously been dragging behind. Part of the reason for that is because the inner city downtown sector, we haven't seen life back to normal until just recently. So those numbers have been really trailing behind, dragging the condo market down. But we'll get into these detailed statistics in a bit here. We'll talk about the apartments in Calgary, which communities are really popping off and others that are falling behind.
Yeah, it's interesting to see the condo prices lagging so hard. I'm excited for that part of the presentation because that's actually where we're seeing right now. We just did the Toronto market update, and
Yep.
Toronto, we've actually seen downtown condos starting to really swing back, and they're coming back. And so I think the downtown condos in Toronto, at least, represented a pretty interesting opportunity where, detached houses were actually so much more expensive. And so you see the market shift back to, you know what, maybe we will start migrating more back to our downtown condos again.
Yeah. And so you're saying downtown condos are swinging back on the rise or dipping down?
Yeah.
Oh, okay. Yeah, that's interesting to see. I think it's so much to do is relative affordability, right? People are getting
absolutely.
And that's what's happening here too. Like that's why. So getting to this is actually my favorite slide because you get into the different districts and the different sectors of homes. So you can really break down what's going on in different areas depending on the home. So apartments, let's key on that right now. We have, Calgary's broken up into sub-quadrants. So 4 real quadrants, but 8 sub-quadrants, all broken down by color here. So Southeast, for example, we have months of inventory of 0.59. So that's that's extremely low inventory. That's why you start seeing price increases year over year of 20%. Like that for condos is pretty crazy, and just 5% increase in the last month. That's strictly based on inventory and relative affordability because the Southeast in the detached sector has also seen the biggest increases of 24% in the last year. So the benchmark prices used to be below 500 this time last year. Now they're up to 600,000 for a house. I do have a lot of clients looking in the Southeast. It's a great community. They're newer homes, but they were starter homes, right? They're all starter homes. And now you're starting to see starter homes into the mid sixes. Everything's going into competing offers, selling for 100 to 150,000 over list, which is driving people towards, the apartments, the row homes, anything that they can actually start building some equity in a property that they can afford, right? And there's different mentality around that too. It's like, is the market going to dip down? I think that's what a lot of people are thinking about, and purchasing an apartment in the meantime to kind of get by for the next couple of years to see what the market does. In the city center, though, which is interesting because I know in Vancouver and the bigger markets like Montreal and in Toronto, the condos have been insane. Lots of speculation buying, lots of vacant apartments as well, with a lot of foreign investment. But in Calgary, we haven't really seen that, and especially in the last 2 years or so. Downtown's been pretty dead. There's been no reason to be there. But in the last 3 months, ever since we've had a full reopening, Flames games are packed. They're sold out. There's lineups to get into restaurants now. It feels like it's back to normal. People are actually working out of their offices downtown again, which is great because there's a reason to be downtown now. So this time last year, we were on a channel with you guys. We did a special on just downtown apartments. The amount of inventory that we had was insane. It was 8 months of inventory, which is currently that's almost there was like 1,500 listings just downtown, and that's never a good thing, right? For any market, that's you have to deeply discount your home to get it sold. So look at the number here. So it just went down 0.25% in the last year, but the amount of inventory is so much lower. It's down to 2 months of inventory now, but the benchmark price has not changed. Although in the last month it's changed 2% positive, and this so far into April it's gone up another percent. So I do believe this part of the market is set to take off just based on the level of inventory and how low the benchmark prices are in relativity to the rest of the condos in Calgary.
Yeah, it's insane how much cheaper those are. I'm not aware either of like the longer timeline of the prices of these types of assets. But I mean, if for example, we look back 5, 6, 7 years and we see that price is higher than where we're at now, I can't help but think like that's a possible buying opportunity, right?
Yeah, exactly. And so our condo peak for inner city was back in 2015.
Okay.
That was right before the oil crash happened. Downtown was booming, and there was a reason to be there, right? And obviously, our economy is much different than it was then, and it won't ever be the same. It's more about mixed economy now. There's going to be more about the tech side of the industry, and forward thinking. It's not always going to be oil based anymore. So it's going to be a big transition period. But we do have a lot of vacant office space yet to fill. But I do believe with the relative affordability of Calgary compared to other major cities in Canada, we've already experienced it, right? We've had a lot of immigration from different provinces. Because they can, have a great city to live in, have all the amenities of a big center, but not pay, Ontario, BC prices, which is a huge factor in that. So we're attracting a lot of people. I almost guarantee you this market is going to take off throughout this year. It already is starting to show signs of increased pricing, and the levels of inventory are kind of set for that. They're kind of laying a foundation for future growth here.
Yeah, it's fascinating. I mean, when we were doing the update with Emma Pace from Toronto, like I believe, don't quote the exact number on me here, but I believe the number was around 900,000. So, I mean, when we look at that relatively, right, that's an insane disparity. That means you could buy like basically on average the nicest house detached in Calgary, or you could buy a downtown condo, which is maybe, I don't know, 600 square feet, 700 square feet in Toronto. So like, to me, this is obvious. This is like, why would you be there? Calgary is a real city. It's a big city.
Yeah, 1.3 million and change. So
that's huge.
I mean, obviously you're close to the mountains and everything. People who love our outdoors kind of things, they love Calgary. It just, except the weather. I mean, it has a huge snowstorm out there right now. I'm looking at it fall, and it's a bit insane. But
we got a snowstorm here, unfortunately, too.
Oh, seriously?
I think it came from over your way.
Yeah, it's been a weird spring, man. No, but you look at how the other markets in Calgary have taken off as well. So detached homes, up 20% in the last year. Semi-detached, row homes, everything is up except for that sector. So it's a matter of time. I would encourage anyone looking at condos investments to look at that. And as well, if you're a first-time home buyer or an investor, 20% on 300,000, it's a pretty attainable goal for a lot of people as well. And especially if you're looking at, Airbnbs, downtown condos are obviously a great place to be for that. Stampede's coming up, and there's a lot of reasons to be trafficking that area. So we can definitely talk more on that. Reach out to me if you do want more details on specific sectors of Calgary. So I just want to break down between just, each sector and the amount of inventory as well as the days on market, just to kind of predict what's going on the next couple of weeks here, next couple of months. A lot of people have been asking me if things are still going into competing offers, if the market's still hot, because I guess, half my clients are from out your direction. They're in Ontario. They are investors or people looking to migrate here for work. But I guess they've seen a bit of a drop in some of the markets in Ontario. And they asked me the same thing: is it a better time to buy now than it was a couple months ago? Well, it hasn't dropped here, and a big part of that is what we're seeing is the inventory levels. Lots of these people are looking for detached homes as well, younger families looking to move and have some space. We're sitting at under a month of inventory for detached in Calgary, and the days on market have gone down consistently every month this year. So I think
Wow.
we started at 30 days on market, which is, compared to this time last year, it was about 60 days on market. But now we're sitting at 14. So what that's telling me is that, the average time it takes for a home to get sold firm is 14 days. Typical condition periods are 1 to 2 weeks as well. So a lot of these homes are either selling on day one firm or they're selling on day one conditionally. Which means if you're a buyer in this market, you have to be extremely quick. You have to find someone who's working almost around the clock to find listings for you and go see them right away. Because, oftentimes sellers are accepting offers on day one and day two. They're not allowing a ton of time, but just enough time to get in there if you're a bit flexible. But the market is incredibly quick just based on the inventory. So if you're looking for a home, it's important to be extremely speedy with that and make some quick decisions, just because the market right now is not slowing down. Once we start seeing more inventory come on later on this year, I do believe, like in summer, things typically slow down historically anyways. We are going to see, I think, a bit of a level out throughout the summer and into fall. Will we see a dip? I don't necessarily think so. But if you are looking to buy a home, I think you're getting into better waters than right this month. But just something to be aware of there as well.
One thing I wanted to ask you about while we're on this, while we're still up here on this slide, is actually the sales to list price ratio. Now, if I'm reading this correctly, does this mean that we're listing at price X and then selling at a price which is 2.4% on average higher than that list price?
Exactly. Yeah.
Okay, interesting. So that's very different than what we see a lot of the pricing strategies here in Ontario. I think a lot of our major cities, the real estate agents will advise their clients to list about 20% below the target price, and then hold offers for about a week. And then at that point, they are attempting to get a price which is 20% higher than the list price.
Okay. And they got maybe like 50, 60 offers at that point too.
They may have a lot of offers, and so that's interesting, I guess, in terms of real takeaways here for anybody that might be looking to offer in Calgary, is that your price that you're looking at on MLS might actually be a lot closer to the target price that the seller is looking to get, rather than what you may be thinking of if you're coming from Ontario, which is, oh, I'm looking at $1 million, but it's actually 1.2, and that's outside of my affordability.
That's a really good point there, because things do operate a little bit differently here, and sometimes I forget that that's how it works in Ontario lots of times. Because to us, seeing 102.4% of list price is a bit nuts, but I'm sure that's so much different out there. No, typically you're going to see a lot of listings come on the MLS on Thursdays and Fridays, and they're going to host showings on the weekend, so Friday, Saturday, and then they're going to review offers typically in the evening on Sunday.
Wow.
Depending on the home and the sector and where it is, what price point they go on at, you're typically going to see anywhere from 4 to 8 offers. If you're listing way below markets, 50, 60 grand, so maybe like 5%, you're going to see maybe into the low teens for offers, but never do we hold offers for a week here. I've not seen it. Typically about 3 days would be the maximum. And we do see a lot of bully offers as well. So we've gotten about 4, well, myself personally, I've gotten about 4 transactions done this year with bully offers. So they're saying they're going to host offers on Sundays, and then getting in there early, obviously, with a strong offer, unconditional, and getting a deal done that way to avoid the stress and the conflict that could happen with multiple offers, right? But again, it's not near to the tune that you experience out east for sure.
But I mean, that's a great selling feature for somebody coming from Ontario to work with a local expert, obviously, right? Because if you were to have just asked me, like, what does this house sell for as I'm looking at it right now on the MLS, I'm
Mhm.
going to just use my quick mental math based on our markets to do that evaluation and think whether or not I
Yeah.
can afford it. So I
No,
think,
for sure.
there's a huge underlying theme here, which is, you need a local expert also, right? So like,
Yeah.
working with somebody in that market is going to be very important because these different strategies are going to be very apparent and potentially very costly if somebody's moving markets and not really aware of this.
Absolutely, and I've had to talk a few of my clients down from that ledge a few times
Yeah.
this year as well, because they're wanting to go in with some pretty ridiculous offers, which they would have got, right. They would have got the deal done, but we were able to dial them back a bit and just help them adjust to the Calgary market a bit, because it's great working with clients with good expectations, but coming from that market, they're just they're trained to think a little bit differently. So it's good to kind of reel them back in and show them exactly what things are going for here, and what's attainable. Dipping in just to touch on the apartments again, because I do think this market needs to be keyed in on a bit more. I do think that any investor right now should be looking very seriously into this. And I know I get a lot of clients who are asking about pre-construction in Calgary as well. I know that's a very popular term and a very popular market to be a part of in Ontario, at least from what my clients tell me. It's not as common here to see pre-construction condos take off to the same point and same level that they do in Ontario. A lot of people come in, I think, with expectations that they're going to pay $300,000 for a pre-construction and it's going to be worth $500,000 in 3 years from now. I don't think. Well, we've seen it actually, but we know that the market doesn't work that way here. There's a lot of great resale apartments on the market that are typically better value than the pre-constructions. But again, we can look at both options for them as well and see what makes sense. But just kind of put that out there as well, that it does work a little bit differently here with the appreciation on pre-cons. Month supply in the condo market, 1.5 across the board. And then again, sale to list price ratio is below 100%. It's at 98, which is again pretty strong numbers for condos, but not to the same point as detached. Days on market is 38. So obviously we're seeing a lot less things go into competing offers, and it allows you, the opportunity to negotiate in a way you would normally on a real estate deal. One-on-one with the seller, possibly get some better value there than when things go into competing offers. That's pretty much a wrap for the market update on Calgary. Do you have any more questions that we should key on here?
I think these are really important updates, and to just see the stark difference between your market and maybe what's going on in Ontario, like especially the major cities. Like Toronto is down, depending on what segment we're talking and which neighborhoods we're talking about, like it's down anywhere from like 2 to 7%. And we just
Okay.
did the Waterloo update, and it's also down I believe it was down like 5 to 7% as well in most segments. So
Wow.
like when we're looking at that, and then we're seeing 20% on average rise on your segments, other than maybe the condos.
Yeah.
That's a really interesting difference, right? And it just,
Yeah.
I'm not sure which is a lead measure and which is a lag measure in terms of, do the provinces follow each other? Are they related or not?
Yeah.
I'm sure somebody with more data at their fingertips would be able to answer that, but it's
Yeah.
certainly interesting to see how different things become if we cross provincial lines. And it's
Yeah.
also great to know too that like the affordability is still there in Calgary. Like the same jobs are reasonably existing in these major cities. Like you've got your basic services, and then you've got your big companies that people are working for.
100%.
But like the affordability of Calgary is so much better, right? I mean, your big segments there in your detached houses were like 600 on average,
Yeah.
maybe a bit higher in some of your neighborhoods, but like, man, you can't do that here. Like even in London,
Yeah.
600 grand, I literally don't know what I could get you for 600 grand that you would live in. You wouldn't
Yeah.
live in anything here for 600. You'd be like, no, I can't
Yeah.
do that to myself, my family, or my friends. So
Yeah. You end up
it,
renting something or doing something else, I guess, right? It makes
you
it tough
you would
for a lot
have
of
to
families.
you would have to
Yeah.
if you're a first time buyer or you don't necessarily have the income, you would be renting for a long time.
Yeah.
But then
Yeah.
that'd be another interesting discussion as well if we're talking about Calgary in the future, is where are the rents
Mhm.
at? Like what
Yeah.
is average market rent? How does that relate to us in terms of investors?
Mhm.
Because here we also do have very, very strong rents. We do have a very suspect tenancy act that we have to follow here, which is not ideal. But and so that makes, you know, existing tenants very difficult to cycle over and to capture those market rents. But if you can do it, we've got really strong rents and a high degree of security, I would say, in our jobs.
And that's the great thing about Calgary too, is that you know, as a landlord, you do have, you know, quite a few more rights than you do in Ontario. It is free market, so you're able to rent things. There's no rent control.
Oh, really?
At least at this point. And we're a pretty tax friendly environment as well. I think people know that, you know, historically Alberta has lower income tax and whatnot, and then we only have GST 5% on your purchases. So cost of living is lower in part of that as well. But with rents, I mean, obviously lower than other areas, the big cities, but you know, where demand right now is kind of matching the real estate demand as well. It's quite high. So that's a big factor. As a lot of people are coming over here as well. There's lots of demand for good quality rentals. Oh, no land transfer tax as well. So I mean, when these investors come here, they assume they're paying land transfer tax. So they're kind of budgeting that part of their closing costs. And they're always super happy and stoked when I tell them there's no low land transfer tax here. So the closing costs are incredibly low, one of the lowest in Canada for closing a transaction here.
Yeah, that's really exciting. I mean, if you've got good rents, good job security, good population in a strong city center, and your houses are like 600 grand, this to me sounds like it's worth warranting more investigation, right? And I think that's where anybody watching this, if you're watching from Ontario or potentially some other province in Canada, or even just somewhere else in Alberta, like look into this, look into this city, because these are exciting numbers. Let me tell you. This is like London's numbers a few years ago before it had crazy appreciation. And now what's happening here is we're waiting for our rents to catch up to our purchase prices in terms of being able to justify the actual purchase prices so that we can make good cash flowing investments out of things. But it sounds like you guys are in the prime spot.
Yeah, no, it's definitely set to take off in the future years here. It's a lot of people talk about. If you ask a realtor, there's one of two trains of thoughts, it seems like, out there. There's a lot of realtors who have been, you know, in the industry for 15, 20, 25 years, who have gone through the booms and crashes of Calgary, primarily based on oil. And what we're experiencing now is different than what we experienced before. Never before have we seen the amount of out-of-province investment that we have today. And I think what we're experiencing now is more of a waking up to people's realization of Calgary and the opportunity it has, and more of a market correction to the bigger centers in Canada, more than it is a temporary bubble or boom. I do think it's more sustainable this time around, but you know, that's my train of thought. It could ask someone different. It could be a totally different answer. You and Matt always talk about, you know, and lots of investors do as well, the 1% rule when it comes to real estate. So, you know, if you purchase a house for 500,000, you want to be able to rent it out, gross rent for $5,000 a month. That's is always something I looked at and thought it would be unattainable, especially in the last couple of years. It just seems like it's impossible to find something like that. I did actually come across a home that was listed a couple weeks ago. We were in on it. We actually ended up missing out on it. It went to competing offers. My client didn't have enough time to consolidate exactly what we wanted to offer. So we kind of missed out on it, which isn't a bad thing. But what it did was it gave us a kind of an idea of what to do next. So I am working with a lot of investors right now when it comes to Airbnbs in Calgary, because it's the one way we can actually still attain the 1% rule. It seems that for long-term rentals, it's almost impossible with the prices you're paying for homes right now. But if you optimize a short-term rental, which still is possible, I know people talked about Airbnb for years, and it's not a new thing by any means. Everyone knows about it, but there is definitely attainable ways to do it, and especially in Calgary as well. So I wouldn't mind dipping into that a little bit if you got some time here.
Yeah, absolutely. I'm always game to hear about the different strategies to make things work fundamentally in a market. And the 1% rule, like just for an example, Ontario is a dumpster fire now, and like nobody's ever going to be seeing 1% rule again. This is like 0.5 at best here, I would say on average. So yeah, I mean, we love the 1% rule. So if you can get there through short-term rentals, why not?
Absolutely. And that's exactly it. So just going to pop up my screen here and just show you a deal that we had last couple weeks. Okay, perfect. So this is
days on market too.
Yeah, yeah. It listed, I believe, on the Friday and sold on the Sunday, unconditional at 475. And the reason we missed out on it as well because we weren't able to waive conditions early. We were kind of too early in the stage of working with the client, so we hadn't had the communication with the mortgage broker yet. I just want to give you an idea of where this is in Calgary. So as you can see over here is the downtown core. So you're about a 10-minute drive from downtown. The C train, which is the LRT, like the train that goes down all across Calgary, runs down this road here. So this property is coordinated, situated perfectly for the C train. But this area, it's a good area, but right in this little pocket here on 37th Street, which this property is, it's by this Westbrook Mall. It's not a very good area. It's a little bit seedy. It's not exactly where I would expect an Airbnb to perform well, to be honest, besides the fact that it's close to LRT right here. And I think that's, again, probably the main reason why it succeeded. I want to pull up the pro forma on this for you as well. But this property was able to bring in, on average, about $6,000 gross a month doing short-term rentals.
Wow.
Part of the reason for that is the zoning that it had as well. So this is Mc2 zoning, which in Calgary is just multi-residential zoning. Anything that starts with an M, there's MC1 and MC2. MC2 is higher density than MC1, but it's very atypical to see that on like a semi-detached home like this one here, a half duplex. But the reason they got wrapped into that was because it was bordering 37th Street. And 37th Street, they're doing a lot of redevelopment. They're trying to bring more multi-residential on that street, make it more appealing. So this actually got wrapped into that zoning because typically it would have been only zoned for 2 dwellings. But because they had that zoning, they were able to put in 2 legal basement suites. And it is a bi-level. So again, bi-levels are great for basement suites because you can bring a lot more light into the property and typically have that side entrance. So they were able to break this property up into 2. Basically like bachelor suites in the basement, and on the main floor was 3 bedrooms, 1 bath, typical kind of 1 floor layout, right? Monthly rent for this place would typically be for a 2-bedroom basement around $1,000, and the main floor maybe $1,250 to $1,500. So the maximum you could probably get from the property would be $2,500 a month on long-term rental. And I'll pull up the pro forma here for you guys just so you have an idea of what this was getting. Now, this is owner occupied for the first half of the year upstairs. So there's no rents here from January to June. July, because the Stampede is our biggest month for rentals for Airbnb by far. You'll triple your rents just in July just because of the demand for being close to the Stampede grounds. Now, adjusted this for the full year, you're bringing in I believe it was 62,000 for up and down, which would, I think it came to about 5,800 or 5,900 a month in gross rents, which is pretty awesome. I mean, and this is a property that's not even in a great area. Now our team have been working on kind of developing a bit of a site map for ideal locations for Airbnbs. Now, number one thing to look at is not being in a condo. I think in condos, especially in Alberta, they've brought into legislation that condo boards have a lot more control over what they can allow for short-term rentals. And a lot of people are bringing into their bylaws no rentals shorter than 30 days, which screws you for Airbnbs. It's a non-starter. You're going to get fined through the nose. It's not going to be worth it. And it's just de-incentivizing that. So everyone kind of typically bought condos for Airbnbs. I am definitely trying to steer people more towards semi-detached or detached with the proper zoning, so you can kind of add additional suites to the property.
And then there would be no additional licensing or anything required to run an Airbnb outside of a condo, like if it's freehold?
It is freehold, yeah. You'll need your insurance, and you need to cover your butt in different ways, but as long as you have the right zoning, no one can complain about it.
Cool.
If you don't have the right zoning, say you're in RC2, so meant for 2 dwellings, and you're on a semi-detached just like this, and your neighbor starts catching on to what's going on, that could become an issue over time because technically they could report you to the city and they could, take away your right to do that. But because it's a legal suite, they can do what they want with it because they have free rights to the property. So what our team have been doing, we've been door knocking, we've been basically, scouring the areas that we think would be proper for Airbnbs, close to universities, close to hospitals, and close to LRT. And we've identified quite a few properties for our investors off market that would be, almost a template carbon copy of this guy here to allow people to earn that 1% rule. And our team is working on doing management as well for our clients. Only short-term rentals. We do have partners who do long-term rentals as well, but no partners that do short-term. So our team is looking at doing that in-house going forward for our clients and managing the properties for them here in Calgary.
That's awesome.
And just to give you a quick snapshot of a live deal that we were working on. We might take a pass on this one just because the price point is a little bit high for what we need it to be. I'm not going to share with you any of the off-market stuff, obviously, because we're working on those right now. But this is a deal that anyone can see on the MLS if they want to look this up. It is a semi-detached as well. It's a 10-minute walk to one of the big universities here in Calgary, just north of downtown. Here, I'll show you. This is the State University, so it's the technical school. And then over here, you have University of Calgary, and then the McMahon Stadium, hospital. It's all within this little pocket that would be great for walking. You're about a 10-minute walk to the C train station as well. So you could not really find a better location for walkability. This property currently listed at $550. It's overpriced. It needs to be below $500 to make this one worthwhile. But it also has two basement suites as well. So one 2-bedroom suite and one 1-bedroom. And the upstairs is a 2-bedroom unit as well. So this property would have very close and similar numbers to the one that we just showed you in Ross Carrick. It would gross around $5,400 a month with current rentals and a hypothetical occupancy rate of 80%, which is not hard to do as long as you're realistic with the numbers you're charging per night, which of course we're on the safe side and we would be.
Yeah, that's awesome. Those are fantastic rents relative to the purchase price.
Yeah, no, it's definitely opened up a few doors for a lot of my clients. And again, like their expectations coming from Ontario, they've been a little bit lower, right? Like they've been stoked having, $400, $500 a month net profits. But here we have an opportunity to triple that or quadruple it, depending on the property that we find for you. The calculations on this one come to around $1,550 net after management fees, putting 1% of the property's value away each year for maintenance and so on. So this would be a good property still. Not amazing just because you need a bit of work on it, being some renos. So it does need to come down in price, but definitely a cool little option for somebody out there.
Yeah, that's awesome. It's just amazing the difference in purchase price relative to what you can get for revenue here.
Yeah, no, it's pretty awesome to see.
Geez, shout out Calgary.
Yeah.
That's awesome, man.
Have you ever been here before?
I've never been to Calgary. It's been on my list for actually quite a while.
Okay.
I've been to Edmonton really quick, but never to Calgary. And
Okay.
I definitely look forward to it. And I know who I'm giving a call next time I'm there.
Yeah, man.
They're just giving the condos away. I'll just get one downtown and just have a spot to crash.
Yeah, exactly. I'll manage it for you, Airbnb.
Yeah, there you go. Yeah, that's awesome, man. Well, thanks again for the update. I definitely learned a lot in this presentation. And again, we've been ripping through on the channel different updates of the various major Canadian cities. And this is certainly one of the more optimistic ones and one of the more positive ones. So I'm definitely excited to see what happens with Calgary and excited to see too and hear from people. Leave a comment if you're already buying in Calgary so that we can hear about your success stories because you're now benefiting from 20 to 25% appreciation, it looks like. Or maybe you're one of the ones that have a negative 1% or whatever on your condo. And we'd love to hear from you too. And I'm just going to keep watching this because this is definitely exciting for me. And to see a big major Canadian city put numbers up like this right now is really cool. So I'm in the market as well, and maybe you're the guy to take care of that for me. So I appreciate you coming on today and doing the market update for us. And I think one of the big underlying themes here has just been that you need a local expert to walk you through this stuff. You need somebody that knows how the strategies and tactics work in that specific market. And Tristan's your guy. So thanks for tuning in, everybody. How can we get a hold of you?
Yeah, thanks, guys. You can get a hold of me through Instagram primarily or on my cell phone. I'll post it. I'm sure you'll post it below. Primary ways, and then my website as well.
Okay, wicked. Thanks, man. Appreciate the update. It was awesome talking to you today.